Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
Talking about what market structure, right? So when we're talking about market structure, we're talking about what is market creating, what is it printing, what candlestick is it pointing out, what chart pattern is it creating, how is it moving. All those things are what we call the market structure. All right, now there are three different market structural movements when we're talking about price action. One, we have what we call a bullish trend, which we all know already, when it creates the higher high, higher lows, higher high, higher lows. Good. And then you say is a bullish market. And then on the other hand, when market is creating lower lows, lower highs, lower lows, lower highs, don't mind my drawing, right? Then you say it's what is a bearish trend. And then the third one is when price is ranging, it has no structure, just sideways. Then you can say the market is what? On a range. Or you can call it indecision. The market is indecisive here. Okay? When the market is indecisive, it's really dangerous to trade it. But you see a lot of people who want to scalp the market. They want to sell from the resistance, they want to buy from the supports. Right? Why those who want to only trade with the trend will only buy when it's bullish and sell when it's bearish. Now, this is a very simple illustration that is always being given. When market goes bullish from this zone, okay, to the upside and falls back, we call that what? A pullback. So when market pulls back, it is anticipated that you should look for your entry level. Right? I need to get my what's it called? What is the marker? Okay. All right. So when market goes bullish and goes a bit bearish, you're expected to look for an entry level somewhere here and buy along with the markets. When it goes bearish again, you're expected to look for an opportunity here, because this was where market found resistance in the past. All right, and fell. There's every tendency that when price goes up and comes back down to that zone in the future, there's every tendency that it will find a support to move to the upside again. So you should look for an opportunity to buy along from here. So when you buy along with the trend, all right, there's every tendency that something can happen here, a reaction in the future. So therefore, as a trader, you want to watch and observe what would market do when it gets here. So if you can see anything that gives you an ability to buy along, then you should buy along. I think I have a chart, boys. Okay, all right. You buy along together. So this is you looking for your opportunities to buy at where the pullback, the end of a pullback. All right, looking for opportunities at the end of a pullback. When you see a market that has gone at least been above the previous resistance, don't buy. Your buying should always be at least from, let's say, latest 40% of the move. At least for me, a latest. Even from here is even late because it's already close to a resistance zone. Because anything can happen in the market. The market can actually get here and turn back. So it's not even safe to buy from here. It's not safe at all. Because if you buy from here, where do you want to put your stop loss? I know we all know all these things. So that's why I'm just trying to break out some certain things, some certain mistakes that traders make in the markets, so that you would always prevent those mistakes. So as a trader, if market has gone at least 10% out of where you ought to buy from, don't buy again. Get out of that market. Just mark out your next entry level and wait for price for to come to you. It's what I always tell my students. I always tell them, set your trap for the market and allow the price to come into your trap and you grab it. Don't chase the markets. So you setting your trap is you've checked out where you want to buy from and you're waiting. Come into here and I'll buy. And once it comes, you buy. If at the end of the day, maybe you weren't online and it came and left, and you found out that, oh, this is where it is currently, leave it. It's already on its way. If you place that buy, you're chasing this market and anything can happen. That's where a lot of traders will say, how come is it that I bought here and the moment I bought here, that's when it started turning. It's a lie. The brokers are manipulating. The brokers are manipulating anything. You are the one who traded wrongly. Your emotions also, greed also, a lot of things. Psychology played a role there. So prevent those kind of things. Only trade from your point of entry. Okay, so that's for a bullish market. What about a bearish market? When the market is bearish, you only want to look for opportunities to trade from the resistance zone. Okay, so let's say you found price that made this bearish move, made a pullback, and you want to look for your entry here. Sell along with the markets. All right, when you sell along with the markets, you want to wait for the next pullback. All right, when market pulls back again, you want to sell from here again. Why? Because you can see this is where market found support in the past that created the previous pullback before it fell. And when it fell, you don't want to just jump into the trade from here blindly and say, oh, it's selling, and you want to sell. No, because anything can run this market to move back. It could be that there is something that happened in the past somewhere that is reacting to, that caused it to find support here and create a pullback. So you always want to make sure that you are selling from the right zone. So the same thing I told you here, the same thing applies to the bearish market. Sell only from your entry point. If market has moved 10% away from your entry point, trader, leave that market. I know sometimes it could be really you, sometimes you could really feel like, man, let me just sell it. Let me sell it. You know, it could be tempting sometimes, but don't be tempted. That's where you we talk about your discipline. Your trading plan has told you don't sell after 10% move of the market. Stick to that trading plan. Or maybe even 5%. If market has moved 5% out of your entry, leave it. The reason for that is because if you sell there, all right, or if you sell beyond that, where will you put your stop loss to be sure that your stop loss is safe? A lot of traders always trade the markets without even caring about where will my stop loss be. It's very important. Where will my stop loss be? So when you want to trade the market, before you even place a sell, ask yourself, where will I put my stop loss? Anywhere I'm going to put it, is it safe there? If you can't find a safe place for your stop loss, it means you haven't found a good entry point. Just take it out. Take it like that. If you want to place a sell here right now, check out where will my stop loss be. If this is a resistant level, I want to make sure my stop loss is above the resistance. Now, if I put my stop loss above this resistance, between here I want to sell from and here where I'm putting stop loss, how much am I going to lose? How much pips is this? If the pips is so much enough beyond what I'm willing to risk, then I shouldn't place that sell. Or you see a lot of traders, they would, when they jump into the market on the wrong entry points, because they've seen that their stop loss is really far, what they're going to do is they'll put their stop loss here. When they know very well that this market might turn back looking for that resistance zone again. And when their stop loss is hit, they say the brokers has manipulated the markets. So before you place a sell, trader, make sure your stop loss has found a secure place to stay. Very important. I'll still teach us all these things when we get to risk management, because what I'm talking right now is risk management. So that's just, you always want to sell from your entry points, sell along with the markets. All right. And then when the pullback begins, you guys always hear when I say things like lock your profits, right? So when you have sold and sold and sold, I know a lot of times you just be like, man, I don't want to exit. If it keeps going, let's keep going. All right. So because you don't want to exit, the best thing you do is what? Lock your profits. So if you have sold from here all the way to here, set your stop loss here and cover the profit you've made here. Then dash this one to the market. What you're doing a two game here. Yeah, you're dashing it to the market. Yes, that's if it ends up going all the way and hit stop loss, no problem, I dash you. But if it ends up going just a little and turns back, and you continue grabbing the money, but one thing is that you have secured a lot of money from here to here where you placed your entry. All right. Or you can decide to say between here to here, once you hit it as my TP, I'm exiting the market. That's it could be your trading, it could be in your trading plan. So that's why you have to set a trading plan and know what you want. Know how many pips you're willing to take out of the market. All right. So this is how you want to look for your entry levels. Very important. This is how you want to always look for your entry levels. So for a ranging market as a trader, you want to ask yourself, what kind of a trader am I? You need to identify what kind of a trader you are. There are traders who are trend traders and there are traders who are scalpers. So if you're a scalper, it's best, the market is best for you in a ranging market. Because all you just want to do as scalpers, what you just want to do is you just want to grab out a few pips out of the markets and they're satisfied. Okay? So you just want to look out, where am I buying from? Where should I buy from? Once I see an opportunity to buy from here, boom, I'll buy. Sorry, and to sell from here, boom, I'll sell. And once I sell, I don't want to hold for so long. I want to exit anytime soon because they know very well that since it's a ranging market, it will turn back the other way around. All right, that's scalpers for you. They don't trade for so long. And one thing about scalpers is they always over leverage because they know that from here to here might not be so long for them. What they want to do is they want to use huge lot size. So they know that okay, between here to here should give me enough money with a huge lot size. Okay, so you want to know what kind of a trader are you, trend or ranging trader? Scalper, I mean to say. So that's that for market structure. Okay, that's that for market structure. So understand the market structure, understand how market moves before you even place any trade. Understand the market structure. Let me delete every single thing. Okay. So when you get into your charts, the one thing you want to check is the trend. Yes, it's bullish. The next thing is this bullish a strong bullish trend or not? So let me teach you the how to know when the market is a strong bullish trend and when the market is a weak bullish trend. With a very simple illustration, we have I have what I usually use as where is my